Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 12th of February 2020, so yep, welcome everyone. Welcome to this Wednesday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, also just before we jump in, quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we update on a daily basis. So yep, I believe you can find a lot of useful information here, guys, so feel free to visit us on jfdbank.com and click on the research tab right there. Right, now then, let's jump into the charts. Now the first one I want to touch on here is the FTSE 100. Now I kept on talking about the FTSE for past few days, and basically what I was telling you guys to keep a close eye on this downside line, and of course this potential idea that I've mentioned on Monday, where we could see maybe somewhat of an inverse head and shoulders pattern here. But again, for now, looking at the cash index, let me just quickly take a look at that one. So the price is currently balancing around the 7,526 territory. So basically it's still below the level that I was talking about previously, the 7,534, but of course the fact that it's now above this downside line here, that kind of gives a bit more hope for the buyers. And of course the good performance seen yesterday, especially in the equity markets, in the European ones, and yep, like I said, we could see maybe a bit more upside here, especially if the pound starts drifting lower. So we could see the FTSE rising here. But what we'll do is, of course, as I mentioned previously, we'll stick to the 7,534 zone, or for those who are more on the cautious side, the 7,550 territory. A nice good move above this could open the path towards the 7,642. This is what we're going to be targeting initially, and after that we'll take it from there. For now, like I said, guys, it is building up nicely here for a potential move higher, but again, we need that confirmation break first. So that's why we will of course, the bulls are happy here that the downside line got broken, but especially looking at it, like I said, on the cash index. But of course, let's take it still with a pinch of salt, and let's wait for that confirmation break first before examining further upside. Now, in terms of the downside here, pretty straightforward, to be honest. I mean, we would like to see a drop below the 7,428 zone, which is the low of this week, and only then the current low of this week, and only then we will aim for the downside. Until then, we're not really examining the downside yet, so we're leaning more towards the upside, but again, we need that confirmation break first. A quick mentioning of DAX, the German index. So here the index managed to create a new all-time high, and this is what I talked about this week as well when I was covering DAX. What I was saying, that in order for us to get excited about further upside, we need to see a nice good push above the 13,640 zone, and only then we will aim for higher levels. Initially, of course, I was talking about the 13,600 area, so we got a nice push above it, but then the index continued to travel higher and broke above the 13,640. The the price is currently balancing near the 13,682 territory. So basically, if it remains there until the market opens in about 55 minutes, then yep, we could be getting ourselves a nice little gap here to the upside. And of course, the big question: can this drift further north? Let's not forget that this is the all-time high for DAX, and in a way, anything above the 13,600 territory is the uncharted territory for this index. So that's why be very careful, guys. It is going to be difficult to try to find the resistance, but of course we could start just aiming for those round number, or let's say not with numbers with some zeros, let's put it that way. So the 13,700 and the 800 then. So at the 800 level is roughly around the upper bound of the Bollinger Bands here, upper side of the Bollinger Band, and on the 4-hour chart. So that's why it could be a nice good potential target here. But first, of course, let's be very careful in case this suddenly starts dropping back below the 13,600 territory. Now we will keep an eye on this upside support line. Now I do understand it's a bit of a tentative one because we didn't have our breaks here, but we'll keep an eye on it. And if this suddenly starts falling all the way below the 13,445 zone, or even the 400 level here at 13,400, then well, it increases the chances of a further drift lower, and we could see maybe a test of some of these lower areas. But again, for now, guys, the downside is slightly off the table, and let's see if this can continue pushing further north today. Bitcoin now. Bitcoin, I talked about this one in the beginning of this week, and what I was mentioning, that in a way we could see that little correction here after the index, after the crypto managed to reach the area near the 10,200 zone. It drifted lower, and this is what I was saying, that if it remains above one of these upside lines here, this could reverse and push back to the upside. So in a way it did remain above this shorter term shorter term tentative upside line taken from the low of the 26th of January, and it now reversed back to the upside, and it managed to overcome the recent high here near that 10,200 zone. So this, of course, confirms a forthcoming higher high, and the next target for us is the 10,540 zone, which is marked near the high of October 25th. Now again, we'll keep a close eye on this one, because if this is just seen as a temporary obstacle, the next potential area to consider, let me just put this one on the chart, and that could be around the 10,940 zone, so roughly around here. That's basically the highest point of September. So again, guys, long story short, for now, yes, it's working out according to plan, that I've mentioned in the beginning of this week. So we got our little retracement, and then we got a nice push and a break above the 10,200 zone. So next target for us is around the 10,540, and then we'll take it from there. USDCHF, very quickly on this. So I talked about this one as well, and basically what I was mentioned was that if we get a drop back below this 0.9762 territory, then well, I mean, we could see this one drifting back down again. But again, for us to get comfortable with the downside here, we would like to see a drop below the 0.9713 zone first, which is the high of the 31st of January, and only then we will aim for lower areas. For now, guys, it is a bit of a tricky one. The upside is starting to get slightly off the table unless it pushes above the this week's current high near the 0.9789 zone. So if we do get a push above this, then yes, we will aim for higher levels. But for now, as you can see, the rate got back inside this previous range. So in a way, this area here will be somewhat of a neutral one for us, but if it starts dropping below the 0.9713, then well, we will aim for the lower side of the range. USDJPY, very quickly on this. Also, I talked about this pair, and basically continues to move sideways, and we cannot really do anything yet until we get a nice good breakthrough one of the levels here. So the on the downside, we need to see a drop below this lower side of the this little range here near the 109.65 zone. If we do get a nice good drop and a close, at least a 4-hour candle close below this area, then yes, we will aim for lower levels, but for slightly lower levels in the short run, because overall, don't forget that we are still above this upside support line taken from the low of the lowest point of August. So in a way, any kind of throwback here could be seen as a temporary correction. So now then, but from the very short-term perspective, as I mentioned, and let me just quickly highlight that for our future reference, we need to see a drop below this territory here before we could consider the downside. And again, that's why what I've mentioned before is that we need to see a nice, at least a 4-hour candle close below this in order to examine a potential move lower, because as you can see, we do get these breaks here, these false breakouts, but neither of the 4-hour candles close below it. So that's what we need here. We need to see a nice good close before examining the downside. In terms of the upside, the same story, but vice versa. We need to see a nice good break and a close at least of a 4-hour candle above the 110.03 territory, roughly around there, in order to aim for the at least for the 110.29 zone, which is the high of the 16th of January, and or in other words, the highest point of January, and then we'll take it from there, guys. For now, let's keep an eye on these two levels. GBPNZD, so a nice good drop lower, and this is what I talked about yesterday. Basically, I was telling you guys to keep be very careful with this one, because in a way, yes, we did get a nice push above the 2.0195 zone, but as you can see, the GBPNZD sold off this morning during the Asian morning. I mean, we did get the figures from the New Zealand central bank, and we got the same rate. They kept the same interest rate as previous, and the NZD traders took it as a positive, and we saw this pair, and we saw some other pairs where NZD is one of them, and everything like the majority of the biggest counterparts, let's put it that way, the biggest counterparts kind of depreciated against the New Zealand dollar. But again, for now, looking at this technical picture, yes, on one hand, it is still above this medium-term upside support line taken from the lowest point of July, but on the other hand, from the short-term perspective, it is drifting lower. It dropped back below the 2.0195 zone. Now what we're going to do here is we're going to keep a close eye on this little area right here near the lowest point, the low of 6th of February, and that's around the 1.9989 zone. If we get a drop below this, well, I mean, this could lead towards further declines, a deeper correction lower, and yep. For now, guys, keep your eyes on this area here, the 1.9989. If we get a nice drop below this, this would confirm a forthcoming lower low, and we could aim for this upside line. In case this suddenly reverses back above the 2.0195 zone, yes, that could be a nice good sign here for the bulls. But now what we will do is, of course, we will lift our breakout barrier to the upside and lift it to the current high of this week near the 2.0257 territory, roughly around here. A nice good pop above this could in a way open the path back up towards the high of the highest point of January near the 2.0441 zone. So we'll keep an eye on this one. And the last pair for the session is going to be the euro dollar, as always. Now look at this beautiful activity here, and this is what I was talking about yesterday. Basically, the fact that it rebounded nicely after it broke this 1.0902 territory, or sorry, 0203 territory. It broke it initially to the downside, but quickly the bulls pushed the rate back above it. But what I was saying, that if we get a drop, if we get a break of this downside line and a push above the 1.0939 level, then we will aim for the upside. So a lot of people were calling out now a nice potential reversal here, but as you can see, the downside line did its trick and kept the pair lower. So now the big, again, it seems that it wants to drift below the 1.0903. So of course keep your eyes on that one. For now it is balancing around it. If it gets a nice good push lower again, then well, we'll aim for the yesterday's lows, but mainly we'll target the lowest point of October near the 1.0878 zone. So guys, be very careful on this one. You can see that a lot of traders probably got stopped out here because it showed a nice reversal to the upside, but it still remained below this downside line. And again, as I said, for us to consider higher levels, we needed to see a nice good push above the 1.0939 level. But what you could do here now is if you're really impatient, you could keep your eyes on this yesterday's high. Now again, because if we get a push above the 1.0925 territory, this would automatically place the rate above the downside line, and in a way this is where more buyers could start coming in and potentially driving this one to the upside. So in a way, although for us still the more comfortable level is the 1.0939 level, but we will start considering now the upside if we get a push above the yesterday's high near the 1.0925, and then yep, as I said, because this would place the pair above the downside, this short-term downside line, and well, more buyers could see this as a good opportunity to step in. So keep your eyes on that one. Okay guys, I really hope you found it useful, and thank you very much for sticking around and watching it till the end. If you want to join me later on at my Traders Tea Time, as always, that's 14:15 GMT. For now, I hope you have a beautiful trading day, guys, and I'll see you later. Thank you very much, and bye-bye.